My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job, it's not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. How the heck does this market keep roaring while there's still so much despair over the coronavirus? There's a seething anger sweeping this country, and it's directed point blank at Wall Street. This relentless rally seems unfair, it seems senseless, and it seems heartless. Thousands of people are dying, and money managers are cheering the most enthusiastic stock comeback in living memory. Dow gaining another 559 points today, S&P climbing 3.06%, NASDAQ pulling almost 4%, 3.96%. How the heck is that even possible? Well, why don't we start with People's Exhibit A against both me and the market. Here's a picture from last week when the wild rally had been cemented in the history books. The Dow's best week since 1938. Then my head. Then breaking news. More than 16 million Americans have lost jobs in 3 weeks. 16 million. Full disclosure, I didn't order this curious juxtaposition to show you how heartless I am. Well, I'd rather have stocks go up than go down because most of you own stocks and are not short sellers. Believe me, there is no joy in Stockville right now. And I agree it's messed up. But the contrast between a roaring stock market and an obliterated job market does tell you a lot about what's happening at this moment. First, every branch of our government can see what's happening. They know 16 million jobs lost is unconscionable. So the Fed, Treasury, White House, Congress, they're pulling out all the stops. If you qualify, the Treasury's putting money in your hands this week, a $1,200 check for every taxpayer who's made less than $99,000 last year. They're also tiding over small businesses with low-interest loans, and those loans will be forgiven as long as you don't lay off your employees. That's all in the $2.2 trillion rescue package. Meanwhile, maybe even more important, the Federal Reserve's pumping $2.3 trillion into the economy by purchasing all sorts of bonds, including junk bonds, allowing marginal enterprises to stay afloat. They're also buying municipal bonds, which is huge because cities won't have to make massive budget cuts at the worst possible time. And now Treasury and the airlines just agreed to an aid package, setting another group of stocks roaring. If you want to know why the Dow had its best week since 1938, it is very simple. The 30 stocks in the Dow are mega caps. They're big businesses that thrive when money comes into the market, whether it be through the Fed, the Treasury, Congress. And when they come together to boost the economy, it's the big caps that do the best. You got to understand, the Dow is not supposed to be representative of the broader economy. There are no nail salons or barber shops or auto mechanics in the major indices. We're not trading luncheonettes here. Maybe it would feel more just if big business was getting crushed along with everyone else, like we saw during the Great Recession. But when big business gets crushed, you get a lot more layoffs. You don't want to cut off your nose to spite your face, do you? Do not get me wrong. I'd love it if the government was a lot more generous to people who work for a living. The $1,200 checks, expanded unemployment benefits, they're great. You could always do more. But make no mistake, we're witnessing an unprecedented attempt by the federal government to try to save the economy, and I cheer it. There are no gangster bankers getting benefits here. There was no rampant speculation like there was in the Roaring '20s. There's just a global tragedy that happens to be hitting our country particularly hard. Without these huge aid packages, bailouts, whatever you want to call them, I don't want to be pejorative at this point. I think we'd be looking at a much worse situation than the financial crisis that was 2007, 2009. It would be something akin to the Great Depression. As far as I'm concerned, anything that stays off a depression is good news. The second reason this market keeps roaring, we got too negative. Remember, it's not like the market's surging to new highs here. We're just partially rebounding from spectacular losses last month. When you want to think about it, remember this. We crashed, and I use that word not lightly, crashed from Dow 29,000 to Dow 18,000 in a couple of days. Stocks were obliterated. The just-released April Bank of America manager survey showed that cash levels are now the highest they've been since all the way back at 9/11. equity allocations are at the lowest level since 2009. Those were both great buying opportunities. That's incredible. When the federal government took action to rescue the economy, that negativity turns out to be excessive. Now, maybe you think this whole rally is phony because it's propped up by government intervention. I see that every second in my Twitter feed. Now, if you feel that way, hey, I got a remedy. Go buy some gold. We're in a deflationary moment. Witness the endless decline in oil despite yesterday's 9.7 million barrels per day production cut. Our government's bending over backwards to offset the deflation. And as long as that's the case, well, gold stocks their buys. Third, let's be brutally honest. There is a real zero-sum exercise going on here, and I don't like it, not one bit. Big business is getting bigger and more powerful, and small to medium-sized businesses are getting obliterated, even as Treasury does its very best to save them. This is terrifying to me, but it is the new normal. Consider the incredible rally in Amazon, which has now surged from 1,676 in mid-March to nearly 2,300 today, a new high. Can you imagine how many small businesses will never come back because they've been forced to close and Amazon's now taking their customers? You simply can't beat Amazon on price unless you're another colossus, Walmart. They've got too much scale. Of course, Amazon and Walmart have been crushing mom-and-pop stores for decades, but the lockdown has thrown fuel on the fire of a process that might have taken years, maybe a decade to play out. I can only think of one way to turn the clock back here, and that's with heavy-handed antitrust enforcement, which I don't see happening anytime soon, because then it would raise prices for everybody. Final reason the stock market, it keeps climbing. There is hope. Chimerical? Maybe, but hope for a vaccine. Later tonight, we're going to hear from Emma Walmsley, the CEO of GlaxoSmithKline, who's formed an alliance with competitor Sanofi to create a vaccine. They might be able to mass produce it maybe at the end of next year. At the same time, Johnson & Johnson reported a star-studded quarter this morning where they talked extensively about the vaccine they're working on. That is certainly ahead. Maybe we're talking about this year and results in the first quarter of next year. It could be that early. Many vaccine candidates are in the offing, even as I think they will be very hard to make. All of this is on top of some good news from Gilead about their antiviral remdesivir. Of course, it doesn't mean everything's going to be okay. JP Morgan and Wells Fargo terrified me with their talk of gigantic loan losses down the road. I'm not hearing about testing, mass, contact tracing, which are all things needed if we're ever going to reopen to a robust economy. I doubt the market will revisit its March lows, not with all this money being thrown at it, but wouldn't surprise me if we got hit with a pullback, given the fact that we're now getting as overbought as we were oversold. But that's not what the market cares about at this moment. The bottom line, at the end of the day, the stock market's made up of big, huge companies, not the small to medium-sized businesses that are the backbone of our economy, that are 85% of our economy. You don't have to like it. I know I don't. But it's the big dogs with pristine balance sheets and gigantic scale that can survive this lockdown. Unlike mom and pop outfits, they can afford to go without customers for a very long time. It's unfair. It's wrong. But like it or not, it's reality. Let's go to Dejwa in California. Dejwa.
What's going on, Jimmy Cramer? How are you, sir?
Hanging in. How about you, partner?
Doing all right. Like you said, calling you from California, originally from Bucks County, Pennsylvania. I know that's your old stomping ground.
You bet I live there.
Oh, yes, sir. Yes, sir. Real quick, if you could, before I ask my question, please wish my roommate Gary a happy birthday. He's turning 28. Love your show.
Happy birthday. Always have time for that.
Appreciate your kindness.
Happy birthday.
Thank you. And then real quick, my question. So outside of Netflix, who do you think the winners for earnings will be? And outside of the banking industry, who do you think the losers will be for earnings coming up this week?
Okay, you're going to like anybody who is does great in the stay-at-home economy and the work-from-home economy. That's the Netflix and that's the Activision. And look, it's the Roku. We all love Roku. It's Teladoc. Good numbers after the close. The losers will be the financials because no one can figure out what the hell they're doing. But thank you for the kind words and happy birthday. Mike in New York. Mike.
Booyah, Professor Cramer. How you doing?
Couldn't be better. How about you, Mike?
Me too.
Good for you.
So, Action Alerts member here.
Yes.
I can't wait for tomorrow.
Conference call tomorrow. Absolutely. We're going to rock. What's up?
So, that being said, earlier this year, we took a position in Activision. We took our profits and we sold it.
Right.
I want to know if it's a good time to revisit the stock again, since the video game market has seen an increase in gameplay due to COVID-19.
I have seen, I listen to Bobby Kotick, the CEO. I've known him for a long time. And I have never seen him this bullish. And I have to tell you, that made me think, you know what? Even at 63, I know we sold it at a good trade for charitable trust. It can work. It can work here. Let's go to Reed, please, in California. Reed.
Hey, thanks for all you've been doing during these crazy times, and I appreciate you taking my call.
Pleasure, Reed. What's up?
Hey, my question for you is about American Express. I bought shares a few weeks ago in the low 90s, and I've been hesitant to buy more given the market volatility. This morning, the price fell almost 5% and touched its one-week low. Is now a good time to buy?
I didn't like the way it acted after J.P. Morgan and Wells Fargo reported. They have a lot of travel, leisure, a lot of corporate expenditure. They have small business. All of these, I think, are problematic. I think you should stay away from that one. I don't think it's the right place to be. All right, look, you may not like it, but we're living in a new reality. The Dow is just not representative of the broader economy. On Mad Money tonight, GlaxoSmithKline just announced it's teaming up with Sanofi to develop a coronavirus vaccine. How will the two drug giants, usually against each other, help in the fight against the pandemic? I've got the exclusive. Then how is the monetary policy helping certain sectors like defense? I'm going off the charts to find out. And BioReference Labs help roll out the first drive-through testing sites in the United States. What is next for BioReference? Well, I'm talking to the man in charge. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.